But the reason really that we see the price of gold rise is we're looking at it by standing on our heads. We're looking at it completely the wrong way around. It's our currency's falling. And I tell you, the foreigners understand this in increasing quantities. So this mechanism is going to increase the pressure on fiat currencies in the coming months, which will be reflected in a fall in the value of fiat currencies, measured in real international legal money, which is gold.
The current situation in the global currency markets is incredibly intriguing, showcasing a significant shift in dynamics. Alasdair Macleod notes that foreign entities, sensing a change in market conditions, have slowed down or completely halted their previous rapid pace of purchasing US dollars. This deceleration has placed downward pressure on the dollar's value, a trend that is especially evident in the United States. Notably, foreign central banks, including those of China and Japan, the two largest holders of US treasuries, appear unable to maintain their former levels of acquisition. For instance, in September and October 2022, Japan's treasury holdings significantly dropped by $131.6 billion from $1.196 trillion in August. Similarly, in February, China's treasury stockpile fell to $775 billion, a decline of $22.7 billion, marking it as the second largest monthly drop among the top 20 countries listed by the Treasury. The weakening of Japan's currency has led the country to sell dollars and US treasuries to support the yen, causing Japan to retreat from the market. In contrast, reports indicate that China is actively purchasing gold, with its reserves reaching 72.74 million ounces by the end of March, marking the 17th consecutive month of growth, according to data from the People's Bank of China, PBC. However, Macleod points out that China's primary activity is selling dollars rather than acquiring gold. Historically, interventions were made to suppress gold prices when the dollar weakened relative to gold. Currently, such interventions are notably absent, likely due to a scarcity of physical gold. Bullion banks, typically long on dollars and short on gold, find themselves with significant shortages in gold. This shortage permeates the entire system, with only ETFs offering some relief. As a result, the ongoing dynamic of selling dollars and the scarcity of gold are driving gold prices higher, fueled by the declining value of currencies, particularly the dollar. Stay tuned as we will present clips from Alistair Macleod's interview with Silver Bullion TV. Please hit the subscribe button and turn on the notification bell for more updates like this. Thank you, and enjoy the video.
This is an interesting situation. This is really telling us that the foreigners have slowed down at the very least, or stopped buying dollars at the pace at which they have in the past. That is why the dollar is going down. Now, you can see that with the way the debt trap is developing in America, you can see that foreign central banks, I mean particularly China and also Japan, who are the two biggest holders of US treasuries, either are not in a position to buy US treasuries. I mean, in Japan's case, they've got a currency which is tanking, and what they want to do is they want to support the currency. And you support the currency, how? You sell dollars and you sell US treasuries in order to buy yen. So, the Japanese are out of it. So where's China? Well, I mean, China has been doing exactly what I've just described, except we think it's the other way around. China has, according to us, has been buying gold, adding gold to the central bank's reserves, PBOC's reserves. But it's not buying gold, it's selling dollars. That is the key. If you understand they're selling dollars, then you can see everything begins to fall into place. Now, the other thing you've got to look at, in the past, when there has been a problem with the dollar relative to gold, various agencies have stepped in and suppressed the price of gold and taken the panic out of the market. So why they're not doing it this time? Well, I think the answer is basically nobody has got gold in order to sell gold and buy dollars. I mean, if you look at the situation of the bullion banks, they are so long dollars and so short gold, they can't go short anymore because, they're getting into financial difficulties. I mean, if you look at the the short position on COMEX with the swaps, which is mainly bullion banks. We don't know what the position is in European banks which offer unallocated gold accounts, because an unallocated gold account is basically a fractionally reserved gold account, which basically means that at the end of the day, the bullion bank is short of gold. So, the whole of our system is short of gold. The only stuff that's coming out is from ETFs. And I guess that's slowing down a bit too. So you can see that this is leading into a very interesting situation. But the reason really that we see the price of gold rise is we're looking at it by standing on our heads. We're looking at it completely the wrong way around. It's our currencies falling. And I tell you, the foreigners understand this in increasing quantities. So this mechanism is going to increase the pressure on fiat currencies in the coming months, which will be reflected in a fall in the value of fiat currencies, measured in real international legal money, which is gold.
In 2024, the price of gold has seen a significant surge, with gold futures climbing by an impressive 14.49% since January 2nd. This surge has driven the price per ounce to new heights, reaching a record $2,160 in early March. Since then, the price has continued on an upward path, approaching $2,382.10 per ounce as of April 19th. Many analysts believe that gold could potentially see a substantial increase in value, with some even suggesting a rise of up to eightfold from its current level. This belief is grounded in gold's historical role as a stable form of real money, a status it has held for thousands of years, dating back to ancient civilizations in Europe and China. While fiat currencies are currently losing value, gold remains comparatively stable. Alasdair highlights the similarities between the current state of fiat currency, especially the dollar, and past instances of currency devaluation. He stresses the need for a return to a gold standard to provide a stable anchor for currency values. Now, let's return to the interview.
Every fiat currency has died in history. It's gone. Gold has continued to be real money from, well, ancient times. I mean, certainly the basis of it was the 12 tables, the first effort of Roman law way back in 448 BC. So we're talking about 2,500 years of gold being money, and it's written into the law of every European nation and every nation that the Europeans colonized, including the whole of North and South America, including the whole of Africa, including the whole of Europe itself. It is a Christian thing. The Chinese went a different route. I mean, I don't know anything about Chinese law, but I understand, and you might be able to confirm this or deny it, but I understand the Chinese word for money is gold. It's the same word. So, that is money. Now, the point is that money is there. It's this fiat credit that's going down. So if you want to call it the value of fiat currency expressed in gold, then it might appear that gold rises 5, 10, 20, 100 times, 1,000 times, 1,000,000 times. It really doesn't matter, because what's happening is the currency is going down. And that is the message I want to get over. Understand. Just imagine, you're in Germany between 1922 and 1923. You find that prices are going up, and you think prices are going up, and you think, but this is terrible, prices are going up. You don't sort of, stop and think, actually what's happening is that your paper mark is going down through the floor. It's the same situation today, exactly the same situation today. And there you ended up with, something simple like a loaf of bread would cost you 1 billion marks, 1 billion paper marks. So, in theory, I can see this happening with the dollar. We just hope that at some stage in this calamity, everybody wakes up and thinks, God almighty, we got to do something about this. We have got to anchor the value of credit to gold. Anchor the dollar to gold. Bring back the gold standard. But the problem, Patrick, is that, they have convinced themselves so much that the dollar is king and, gold is a pet rock, that there's got to be a re-education process. And that's going to slow things down. If the speed of the collapse is anything like I think it could be, then this is going to be a real catastrophe. And I think anyone sort of vaguely saying, 7 times, 10 times, whatever, has actually got completely the wrong end of the stick and ought to understand precisely what's happening.
Gold is, of course, on the rise and is expected to continue its upward trajectory, driven by the inherent weakness of the dollar, which remains despite its relative strength. These ongoing dynamics suggest that gold will continue to climb. This trend is underscored by the persistent weakness of the US dollar in the currency markets. As a result, investors are likely to increasingly turn to gold as a hedge against currency devaluation and economic uncertainty. Where do you think gold prices are headed next? Let us know in the comments section below. Also, make sure to like this video, subscribe to the channel, and turn on post notifications for more updates like this. Thanks for watching.